So the whole purpose of the Logit system is to provide a high level of automation for your compliance. And what you'll notice is that at the start of the demonstration, I will show the compliance controls. Those are the functions that allow you to track what's going on in the system with respect to where your forms are at. And the same goes with your working papers and your tax forms. So we've built Logit so that it's able to consume accounting data out of all of these different systems and essentially roll up that data into a meaningful pattern, which in this case would be tax forms, and send it off to the ATO. That same data that you import for tax forms can be reused for special purpose financial reports and then also for working papers. So you don't have to use multiple systems, one single system. Any changes will be updated across all three of those objects. So what have we got over here? We're now inside of the Logit system, and you can see we've got some dashboards. So we've got a forms dashboard. We've got a work dashboard, and then we've got reports, special purpose reports, and working papers. Each of these are their own dashboard that show whereabouts objects are at in their life cycle. So you can see here we've got special purpose financial reports. We've got 9 sets of drafting, 5 completed, out to sign, and then signed that need to get published back into the system. So once they're published, they're sort of locked in the system and you can't make any further changes from there. Same thing applies to forms. So forms workflow is a little bit more complex. We start with new forms. New forms are loaded in by the ATO. Essentially, this is your lodgement list. You can see these activity statements all loaded quite recently, 23rd of April. And we can then filter if we want to run any, and you can see we've got quite a few filters. So you've got a lot of control over what you're looking at on the dashboard. So now I've filtered and I'm looking at 4 new company tax returns that need to be completed for the financial year. Okay, the year ended 30 June 2020, all due pretty shortly. And then what happens is as you complete your forms, or as you start working on them, they move to drafting. Then they move out to completed. When you've completed them, you send them out to sign. You can send them out manually or by paper, it doesn't matter. They come back as signed and then you press lodge. And I'll show you some of that as we go through. So the forms dashboard, as I mentioned, is one of those 3 dashboards. Working papers is another, and that's even more simple because really you're starting with drafting, going through to completed, and then finished. And work is a composite of all 3. So work dashboards gives you the ability to see what's on the go. You can see I've got 45 objects on the go, and once again you've got the ability to filter. So I could go to annual compliance and I could see what's on the go across my firm from the point of view of just annual compliance, not activity statement work. But maybe I just want to look at activity statements, and these are the activity statements that are on the go in terms of they're in progress. Of course, there'll be a whole lot that haven't been started, right? So work dashboard's another dashboard that carries useful information, and later on we'll have it so that we'll add more filters in here so that you can get an even more granular view of what's going on across your practice. But anyway, you can see that we do have these filters at the moment. So and you can group clients. You can group your clients by client. So if we were to group clients by client and we were to have a look at annual compliance, we would see how when we look down, you can see the groupings in terms of Dave. So here's a group, here's a group, here's a group. So these are all entities in the same group. Now, if we wanted to drill into that group, we can drill into that group. And now you can see the dashboard changes and we can see all the clients that are in that client group. So the clients in the client group is obviously useful because if you have to find a company or something and you can't remember the name of the company associated with that client, you simply look in the client group. And then the forms in here are forms across the whole client group, not just one of the entities. You can see there's lots of different entities in there. When you're looking and searching for a client, best to start up here. So you can search like that, right? Now, to create your groups and to manage your clients, you go over to the client bucket. We come along in here and we can have a look at clients, and we can archive clients from here. So you can't delete clients in Lodgit, you can only archive them. You create your groups over here, and then what you can do is you can put your clients into those groups. So clients can sit within groups, and one client can sit within multiple groups, which can be useful where you've got, say, a company that's got shareholders from different families. So this is where you're managing and adding your groups. So now what I'll do is I'll jump over to actually searching for and preparing a tax return. So we will do a 2018 tax return. Right now what the system is doing, it's going and collecting the pre-fill data. If at this stage the client was a sole trader, we could import financials. I'll show you that with the company in a moment. Form is decomposed into its parts, and only the parts that are relevant are active. Okay, so you'll see that as we work on it. How does the system know what's relevant? From the previous year, so essentially the roll forward data, i.e. the rentals, and whatever's come in the pre-fill data. These other sections are just not relevant to the client. Now we're into the individual tax return, and you can see we've got our major navigators along here. So this is how you navigate with your major navigators. On any one of these sectors, you can see there's already been pre-fill. So you don't have to think about the pre-fill. The pre-fill happens automatically. Easiest way to work with the form is just validate, look for errors. So you can see here we find an error. Now typically you should manage this in the client database, but I'll just do it here. Okay, so we've put in the number, validate again, and simply working our way through and resolving errors. Now I'm not going to go and, you can see this is pre-fill data, carry forward data, carry forward previous year. Number of years the property was rented. I'm simply going to put in data here that will allow me to clear out the errors. You'll notice with any of these sectors you can put in granular data. Right, so you can see that granular data. And there's that property to take care of as well. Once again, just some dummy data. You can see you can split it out if you want. It'll highlight where the error is. The best thing you can do is just clear out your errors, and then you can start filling in anything else. So now the form is valid, there's no errors in it, and we can pre-lodge and complete it. But before we do that, I'll simply show you that to manage the sections and activate relevant sections, you see what sections are relevant in the income part. What we can do is we can come in here and we can activate, say, Forestry Management Investment Scheme, so FMIS. Now you see that activates and turns on, and we can drop in data. So you've got the ability to manage your sections, and then you've got audit trails. You can see who's worked on the form. You can suspend the form so that, if you don't want to lodge it until much later in the year, you can put a suspension on it. That means no one will be able to lodge it until, say, 15 May. You can roll over data. So if you've got, if you've manually had to go and do 3 forms back to back, 16, 17, and 18, then what you might want to do is, rather than going and putting in the rental details again, you simply come in here and roll over the rental data from the 2017 year. Pre-fill, if the pre-fill doesn't come in, you can do this, but as I mentioned, it's primarily automated. Now, let's pre-lodge and complete. The pre-lodge function actually runs the data back up against the ATO systems to actually do like a second check. Okay, so that will prove that there was an actual test on the data, and you can be even more confident that you haven't got any errors and that the ATO systems will accept this data set. You can see this is now completed, and here you could mark this form as lodged because you might want to do this if you have to say that it's lodged because you filled it all in, so you can then click amend. Once you mark as lodged, the little amend button will come up at the bottom and you'll be able to amend the form. It's something that's useful if another tax agent has filled the form, client obviously wasn't happy with that tax agent, shows up at your door, has a copy of that lodged tax form, you can key it, mark it as lodged, and then amend it. So now that this is all done, completed, I can send for e-sign. You'll notice that the e-sign has quite a bit of detail in terms of how you can configure that form. I simply work with the summary data for the client. I don't think they're interested in the detail. You can read through here and see what we have, but essentially the taxable income is picked up, the tax refund or payable is picked up, and then we can simply send it for signing. So this signing function will be, the client will be able to handle this with their mobile phone device or iPad or whatever. They don't have to have a PC for it whatsoever. Now you can see it's out for signing, right? Now if we go to the forms for the client, don't forget we're under the client now. We're under the client. You can see that's now out to sign. And if we went back to the dashboard and looked in forms, there it is, it's out to sign. I heard that form arrive. I'm pretending to be the client. Notice it's got the colors and logos of your firm and information about your firm, and it's come from the person in the firm. You can see here we've got the person in the accounting firm who's sent out this for signing. So from your client's point of view, it doesn't look like it's coming from Lodgit whatsoever. Let's review and sign this quickly. So client will be able to look through this and make sure they're happy with their taxable income, etc., and then get signing. So probably they can use a finger on the screen. That'll work fine, and agreed. That form is now signed. Now we can come back here and we can wait for that form to arrive. Now don't forget, of course, you're not going to be sitting around waiting for the form to arrive. But you can see here it is, and if I was to reload here, it's still sitting as out to sign, but we give it a few minutes or even a few seconds, you can see now it's moved and it's now signed, and when it's signed we can lodge. So how do we lodge forms? You can batch tick the whole batch. Now I don't want to lodge that, that's a dummy form. So and you can see these two here, these two have been signed, but they've been suspended. Client doesn't want them lodged until the last minute. So these are all ready to roll. And then what I can do is I simply sign and lodge. Right, so that's, and those forms will then, if I was to just refresh here, you'll see they will roll over to lodging or lodged. Okay, so there's only a few left there. That's your individual workflow. After that signing event, the client will get another email with a copy of their tax form. So a copy of the tax form with whatever's in there available for the client, right? Now back here, if we went back to that client and looked in files, we've now got a copy of that signed form. That form is also here, and if we were to go right to the bottom of that form, we would see there's a document history, which is essentially your audit trail, when it went to the client, when the client viewed it, when they signed it. Of course, you can see it wasn't the client that signed it, it was me providing a demonstration. So this is all through files. So those signed forms show up in files, and you can see that we've got a file storage here which are free to use. So you could go into files, okay, and then upload a file, and you could upload your own files in here. Now we don't have folders, but you can use our types. So it's a flat file storage system with tags essentially. The tags are of these types: legal documents, regulator notices, financial reports, and reference documents, and you can see the subtypes. And if it's a regulator notice, we've got three types of regulators: financial report, anything out of an accounting software system, and finally reference documents, any type of additional reference document, investment notices, just any default reference document you can put through here. And then you've got two options with dates. You can either reference the document with an instant date, which is probably suitable for, say, a legal document like a deed would have the sign date on it, or if you were referencing a financial statement and you had a profit and loss, it's going to have a duration date, a from to, or you can use one of our preset dates. So it could be all the way July to June, or it could be October to December. So that's a very quick look at our document storage. Now, in terms of that email, you saw that email go out to the client with the tax form. There are controls for all these system settings, etc. up here. And if we have a look up here, you can see that we've got notifications. Now, if you want to get a copy of that signed tax form sent to an email address, simply put the email address in here and tick notify e-sender when a document is signed or declined. Branding, you can brand your documentation. You saw the email going out, and you can just simply upload a logo and it'll automatically detect the colors for you, or you can set your colors yourself. Email settings, you saw that email go out, and I said that it came out from my email account. So how did that happen? Because I've connected my 365 through here. So I've connected. Or you could use Google in the same manner, or any other mail server. And if you don't have a mail system, well, then you could just use Logit. Definitely, I suggest the 365 as the best, Google is the second best, and your own mail server is, not a great idea these days, especially when you can get 365 accounts so for such a good value. Now, in terms of the e-sign, if you don't like the language that goes with with that signature when the document goes out for signing, you can come and change the language in here. And if you have a look at the ITR, you can see I added in something. I said it's especially important to check the bank details we have on the tax return if you're receiving a refund. So you can add or subtract and change. Just be careful not to disturb the little curly brackets. Otherwise, you could damage the code set, and essentially the email won't pick up those data points. So that's pretty much the settings that are associated with sending out documents for e-sign. Now what I'll do is I'll work with a company. So we'll head over to the client, and I will show you that we will work with QuickBooks, but you could equally as well work with any of these other systems through here, and I will at the end show you how to work with Excel as well. But the goal here is now to complete a year end for a company. So we need to once, and you only have to do this once per client, establish a connection between the client in QuickBooks or Xero or Maya or whatever and the client in Logit. So I'm selecting my client here. You can see search for the client. All these different apps all have the same kind of functionality with this. So, it'll be pretty seamless and straightforward. Just follow the prompts. Select the financial year and do the import. Now this presupposes that you've got good accounting data. Either you've prepared the accounts, client has been trained appropriately, or you used a bookkeeper. Either way, you've probably got QuickBooks open on another screen, and you can make any tweaks. If you have to make a change, you make a journal, just refresh the data. It'll bring in the latest data set. And of course, the more efficient you are with managing the books during the year, the less journals and adjustments you're going to have to do at the end of the year. So balance sheet that we're looking at here and profit and loss we're looking at here are exactly the same as what you'd see in QuickBooks. There is a need to now classify these line items. You'll find that the line items are all auto-classified, and what you will have to do is just go through and check them, make sure they're accurate, because the system is not 100% accurate. Like, for instance, so these are the QuickBooks line item names, and this is where the line item is classified to in Logit. Good example of that, NAB 5510, that we know is a bank account. Sure enough, cash and cash equivalents, bank account. But if that was classified to the wrong category, which is possible, then it's very simply a case of looking, finding, and fixing. Or classified to the wrong category, this time simply use the predictive text and just type it in. And once you get to know the naming conventions of the accounts, that is probably the easiest way to go. We're always working on the classifier, so you can be sure that, if you put some effort into your naming conventions and, give a little bit of thought to the naming conventions you use in your downstream accounting software applications, QuickBooks, Xero, MYOB, or whatever, the better the classification will be by the machine. And here's a good example. So you can see here I've named this as accumulated depreciation on leasehold and then created a link to the related account, the leasehold at cost account. Now, if in QuickBooks you simply name this as less accumulated, less accumulated, less accumulated, you'd see three accounts with the same names, and then you wouldn't know which one was which. So you can see just by extending the naming convention appropriately, it means a whole lot more, and then it's easier to create that categorization and the link. Now that link between the cost and the accumulated extends to the depreciation element. So here you can see there's a related account in the expenses category, where we've linked general pool depreciation to general pool. So you can have a quick look through, make sure your classifications are right. Now, in revenue and expenses, you'll see that we've got the concept of tags. So tags are important because tags impact where and how the data or the line item and the line item data is treated inside the tax form. So cash flow boost we know is non-assessable, and you'll see in a moment when we get to the tax form, it's treated as non-assessable because of this tag. Now, there's not actually that many tags that you'll ever use. A lot of these tags are probably, irrelevant in a lot of cases, but just as long as you know that they're here. Like for instance, probably you won't use many of these, but you may from time to time use, say, non-assessable. So we've got here cash flow boost, non-assessable. Okay, just tag it as non-assessable. Same thing in expenses. Tag a lot of tags that it may not be relevant, but that one might be relevant from time to time. And same thing again, just check your classifications and off you go. When you've finished your classifications, you can get to work. I'll show you all three parts that we discussed previously: work papers, special purpose reports, and forms. So we'll start with working papers. Just add in your accountants and your reviewers. If it's you both times, that's fine. These values that you're seeing here come out of QuickBooks with the name, that line item name. That's all out of QuickBooks, right? So it's very easy now to simply attach and upload a reference document. So you can upload a reference document, or you can bring in from the library. The library is the file store. I showed you file store before, and previously I've already come in here and put in my bank statement. So I've got my reference document. I would double check on that bank statement and make sure the value is the same so that it balances, and then I tick it. So that's me as the accountant. My work is done. I've checked this and I've added my reference document. Now note that there's absolutely no need to put a reference document on every single line item or tick every line item. Simply work with the line items that are relevant from a risk perspective and that you as an accounting firm know is important to make sure is correct before you sort of move on with your special purpose reports and forms. So now that I've finished that as the accountant, I can complete that. So now I can see that, if the reviewer comes along, the reviewer can see that this, this set of working papers is completed, and the reviewer can open the working papers up and go to work doing a review. So now I'm emulating as the reviewer. I've come in as the reviewer, and I can put my little tick on here when I have a look through the working papers, make sure everything is correct. So now as the reviewer, I can then approve. And now you'll notice this is locked. When the data sets are locked, either the special purpose reports, forms, or working papers, if we then refresh data across the system like that, those objects won't change again. So the data is refreshing from QuickBooks. Now if I'd put another journal into QuickBooks and I've got a locked working paper, that data set won't update the working paper. So just remember that. You'd have to come in here and you'd have to unlock the data. You'd have to unlock the working paper so that the changes would reflect through. Before working on special purpose, head over to relationships. I'm going to remove that relationship and add it again. So we have Anna Doe, who is our director. So we've added a director relationship. You can have many directors as signatories or just the one, it doesn't matter. And now I've headed over to special purpose and I'm selecting a set of special purpose reports, and I'll use a predefined template, though I could use one of my custom templates. Any custom template that you start with, you can then turn into any predefined template you start with, you can change into a custom template after you make any changes to it. So what are the changes that you can make? You can move these sections around. You can drill into the body of the text and make changes. So let's have a look through and see what we've got. So here's a balance sheet. Easy if I just export it, you'll see what it looks like as a complete object. Once again, your colors, your logos, your details. Compilation report notices, should conform with your CPA, IPA, CA requirements. All the naming conventions appropriate on the forms, on the special purpose, all the right parts to the special purpose, and then your notes. So that's how easy it is to generate special purpose. Now we head over to forms, add a form. Now if that form had been loaded in by the ATO, it would be sitting here as new, and I'd just open it into a drafting state, but it's not, so I'll add it from scratch, which is easy to do. Now what I'm showing you here will work exactly the same with companies, trusts, partnerships, trusts, whatever other entity type, even sole trader. Same with the ITR. Sections are sort of reflected and the irrelevant sections are not visible. Now we can get to work. We can see that the working papers are finished and the special purpose reports are drafting. And you've got all your summary data splashing straight in. So once again, your master navigator across the top, sub-navigator along here. So here we have the line items from QuickBooks going into the right spots. And if we had a look at financial information, also coming into the right spots. And noting that if you do have information coming in from secondary calculators, like in this case here, you can see we've got dividend and interest schedule that gets auto-filled by, let me show you where this gets auto-filled from. I'll just open that in another tab. You can see we've got a franking account and a share register, so you can keep track of who owns what shares with the register, and then you can facilitate dividend payments. You can split and pay the dividends along the franked, unfranked, and the franking credit will calculate based on whether the entity is a base rate entity or just a normal company with a 30% tax rate. Those values will drop in here, as I mentioned. So if we come down here, you can see the franking account data is coming in here, and the dividend is reflecting in there. So those extra tools make it easy to fill these forms, just like the classification of the accounting data does the same thing. Depreciation, so tools, you've got a depreciation module here where you can add your groups, add your assets, and then you've got your reports and your depreciation reports. These reports are tax depreciation reports. Of course, you can use them for your accounts as well if you're happy to use accounting and tax depreciation one and the same. And you can see here the depreciation values will reflect in here as well from the depreciation reports. Tax calc. So now we have our tax calc. Now there's probably not a lot to see in there yet, but let's go back and have a look in the reconciliation section. And it's just worth noting a couple of things. We do have, for all our forms quite a sophisticated reconciliation module built into the forms that will help you find the difference between your accounting profits and your taxable income. So in this case, it's picked up the non-deductibles. You saw me tag entertainment as non-deductible. Super payable sitting on the balance sheet 30 June 2020, non-deductible, automatically picks that up. If there was any super for 30 June 2019, the comparative year, that would be treated as other deductible, other expenses deductible. So other deductible expenses at X, we don't have any. There's your decline in value for depreciation will be in and out based on, out for the accounting side, in for the tax side. Other income not included in assessable income. Cash flow boost, you saw me treat that as non-assessable. And the decrease in interest, why do we have that? Let's head over to the interest. Now, you can see we've got interest coming in from QBO, but we don't have any tax interest. So taxable interest until we put it in. Now you can see there's a decreasing adjustment there that reflects that decreasing amount that we saw in the reconciliation section. If it's one and the same, there will be no increasing or decreasing adjustment. But if this was dividends or partnership income or trust income, it's possible that there will be a difference, and it's possible that that might even be, say, 38. Maybe that's 38 versus 34. In which case it's an increasing adjustment, and then we will see that increasing adjustment in the reconciliation section. So other assessable income, increase in interest. So that's pretty much the tax return done. Any of those tax credits that you're putting in there, we can see those reflecting down here. So tax withheld, you saw me put that in against the interest. If there was any dividend credits, franking credits, you'd see those come through as well. And if you wanted to put in your refundable tax credits, you can either bring them in off the activity statements, regardless of whether you've lodged those activity statements or the client lodged those activity statements, or you can just click here or you can just manually put them in. So you can see you can just manually drop those in as well. So we've pretty much finished that job, but during the job you might want to take advantage of using some of our tools. I showed you the franking account. I showed you the depreciation very quickly. One thing to note with depreciation is you do want to put in your opening date correctly. So your setup for the client is all through settings. You can see here how when you set up depreciation, you set the start date. The start date should be the first day after the last date of the last depreciation report you have from your last accounting software or tax software. So if you had depreciation report for 30 June 2014, you can see we set our start date as 1 July 2014. Very important. If you get that wrong, then you go in and add all your depreciation groups and then add all your assets. You'd have to restart from scratch and delete everything if you don't get that right. So very important to put some effort into getting that right. So back to tools. Share module. We do have a share module which is useful for computing capital gains, particularly in the case where you've got multiple buys, multiple sells, and you want to transact out of the batch with the greater cost base. So we'd want to transact and sell out of that cost base first, because that's obviously going to give the client lower capital gains. Share register, I showed you. We've got tools for borrowing cost, which is very similar to HP. HP Calculator allows you to store a copy of the contract and put in the information about that contract. So the borrowing amount, interest rate, repayments in arrears, in advance, any balloons. You can link the asset if you want. And then from there, you've got your HP amortization table. So you can see here, you can pick up your interest per time frame, per financial year or per month, and that amortization table should resolve itself to zero. Now, if you don't have the interest rate, which is often quite common with hire purchase documentation, we do over in our help section, which is our knowledge base over here, well worth coming and taking a look through here. You'll find that we do have extra tools in here as well, like for instance, so if we look for finding the interest rate. So we've now got a calculator in here which would allow you to put in your variables, given that the borrowing rate or the interest rate is missing, make a call, and it should resolve the interest rate that you're seeking. Hire purchase summary. So if you're taking that traditional approach where you split your hire purchase between current and non-current liabilities, and again between the unrepaid and the unexpired interest components, this gives you a view of what you should expect to find on your balance sheet. Capital gains reports. I showed you the capital gains tool for adding assets, but then in here you've got your reports where you can see what your capital gain would be. It'll split it between short-term, long-term, which is your more than 12 months, less than 12 months. I showed you files where you do storage of the documentation, and really anything more for a working paper. Let's have a look. I'll come in here and show you activity statement, GST analyzer. Quite useful, because this will allow you to resolve any difference between what's on the activity statements and what is on the reports for the GST coming out of the accounting software. So what are we doing here? We're comparing what's on the activity statements. There is an activity statement. We've got the values coming in off the activity statement and splashing into that GST analyzer. So you can see these values coming in here and comparing with what's, as I mentioned, coming out of the accounting software, and we can compare. So if we click, you can see the variance for each time frame changes, and we can see what the variance is, or the overall variance. Notice that the overall variance is pretty much zero. So how did we achieve that? Well, what we did was, for each month there wasn't too much variance, but we just simply opened and amended our June BAS so that our financial year GST would be accurate. So you can see in this case all lodged, and it has been amended 3 times, so it's very easy to amend, and you can just amend it until you get your values right. I'll just remove some of these excess pages so it makes it easier for us to navigate our way through. Same will apply with your payroll analyzer, so you can compare what's going on across your payrolls, what's in your W1, W2 values. So, W1, W2, comparing it again with what is in and coming from your payroll module. So we're again looking for any variance across the financial year. There are some other tools in here, but I'm not going to go through those in detail. Once again, if you want to learn about all of those tools, best thing you can do before you get started with the system, have a good look through the knowledge base and just have a look at the sections that are in here and see what it is that you can learn about. We do put quite a bit of information in here. Individual tax returns, 62 help articles. So regardless of the problem that you face, you're probably going to be able to find a solution. And we do have help topics on effective accounting techniques, which can be particularly useful when you want to use our special purpose reports. And it's quite important that you build your chart of accounts correctly in software like Xero, Maya, QuickBooks, etc., so that when you do the import, you get appropriate equity section reporting. So if you had a look in here, how to handle accounting for sole trader equity, partnership equity, trust equity. So all of those equity sections can be a little bit tricky, especially if you want to use some of our special purpose reporting. So just have a look in there and see how we recommend that you prepare those equity sections in those different types of structures, partnership, trust, company, etc. So let's have a look again. So back to, you can see I'm always searching for the client on the top left. So back to the client notes. Notes are available in here. You can store notes and you can tag your notes, and then you can pin notes. And you'll notice that you can manage the tags. You can add your own tags. In this case, you can see I've added a tag for mail out. So I'm tracking what mail I send out of my office with a mail out tag. Before you start working on any client, make sure that you come through to the settings and get the information in against that client. Put it in. Don't miss any of the information sections. Be sure to add in your emails, your phones, your addresses, your signatories. In the case of a company, you need to add a signatory. That signatory can be another client in the database. So once you've added in your information, then you can go to work on tax forms and the like. People like bank managers, bookkeepers, or anyone that you want to store information about, who you might need to reach out to in relation to a given client. Tax is where you manage if you do or don't manage something like activity statements. So if you don't manage activity statements for a given client, make sure you untick that. Otherwise, those activity statements will flow in to your pre-fill list, actually, like I showed you right at the beginning in forms. Depreciation, I showed you need to get that right in terms of your initial setting. Managing access, if you don't want team members to gain access to this client, you just need to come and add your own name in there. Okay, so you'll already be in here because you've added yourself as a team member, so you can save yourself in here, and then only you, and you can obviously add other team members if you want only specific team members to have access to a given client. Import you saw as soon as you've created a link with one of those downstream accounting applications, Xero, QuickBooks, MYOB, or whatever, it'll reflect in here. Now that we've pretty much covered off on individual clients, companies, etc., I will show you some of the settings for the accounting firm. Now, the accounting firm is one more client. The accounting firm is one more client in the system, and once again, it's important to get all of your details in for your accounting firm before you start to use the system. So just like any other client, get all the settings in there, put in your tax agent number, etc. Team is very easy to come in here, and you can invite your team members in and give them given permissions. So you might not want everyone to be able to unlock a tax form or delete a drafting tax form. So you can control permissions from there. A lot of these settings I've already covered off on with you. So billing, if you like the product enough, you can come in here and buy it. So you can buy the product, or you can reach out to QuickBooks and see what kind of deal they can give you if you've got enough QBO files. Notifications, I went through. Branding, covered. Email settings, client sync. Now, it's possible that you need, and very possible that you'll need to use an accounting software application to manage the books for your accounting firm. QuickBooks provides QuickBooks Online Accountant, QBOA, and that's a free QuickBooks file that you can use for your accounting firm. In there, you'll have your billing module, your trade debtors, accounts receivable. In there, you'll have a list of all your customers, which are essentially your clients. Now, you can then link your Logit client to your billing client inside of QuickBooks. And that link will help with making sure that if a client changes their email address or phone number or physical address and you want to post out documents, post out invoices, at least the information will flow through to QuickBooks. So that in terms of what we have as a working system is probably gives you enough to go on with and work with Logit effectively. There's a couple of things that I'll now show you just to sort of finish off. So actually, I want to show you importing from Excel, because it is possible that you won't have an accounting software application. Now you can see here I've saved in my files, I've saved a template. The template I've already filled in, it's called Financial Import, and I'll show you what it looks like. So we've got our client, which in this case we have a profit and loss. So there's the profit and loss. You can see I've manually added in the rows and the values, and the Excel sheet will auto calculate your net profit. So simply add in your rows and your values. The same for your balance sheet. Obviously, you'll need to make sure it balances, and you'll need to understand how current earnings and retained earnings work. So you can see there the retained earnings flowing forward, balance sheet balancing in both time frames. And then what we can do is we can come to financials over here. and do an import. So what are we doing? We're actually importing that. That's the template. So if you want to grab a template, that's the template. Grab that, upload. And what do we have? We've got our balance sheet and profit and loss exactly as we had it on the Excel sheet. Now, if you change the data on the Excel sheet, just import over the top of it again. So change the values on the Excel sheet, grab the Excel sheet, upload. Right? So now we've done that import again. If for whatever reason now you want to use another system, QuickBooks or whatever, you could just make a new connection to QuickBooks and import, and then you'd be able to essentially have multiple reports from multiple systems. But if at the same time, if you wanted to manually delete this out, you can. So there's a lot of flexibility with how you work with data that you're bringing in and out of accounting software applications. Final thing that we've just added into the system, if we go back to forms, head back to forms, and now what are we doing? We're looking at lodged forms. We now have in Lodgit the ability for you to see where your form is at with the ATO. So you can see some of these forms are processing, right? So if we're having a look at lodge, let's filter that down to individual tax returns, and we can see pending, processing. These ones are reconciled. So we can see in here this form is reconciled, and we could drill in there and have a look at the reconciliation if we want. So view the notice of. So here we're looking at the reconciliation. Okay, we can see the notice of assessment compared against the estimate. We can see if there's any variance. We can then drill in and see the detail of that comparison. We can send this to the client or view the details. Now, to actually get this so that it sends these assessment notices out to the client, ATO, outcome of assessment. So we've received the outcome of your assessment data for your income tax return. Please find it attached. The client will get sent automatically based on if that assessment is matching the estimate, sent directly to the client. Or if it's not, you'll be warned, and there's some techniques that you can use to manage any variances where you can, investigate, resolve that variance. So that's just one of the new things that we've put into Lodgit. It's not yet available in the production system as of early May, but it should be in there by the end of May. You should have that in the production system. This is just a testing platform. So that, I think, gives you a sort of a reasonable overview of the platform. From a security standpoint, we do have logs, so you can see what's going on in the system, who's accessing the system and from where, or you've got your own personal log here. This is just all part of our security requirements to meet our ISO 27001 certification, and we're regularly tested on our security by the ATO and also by an ISO auditor. That means that we have to meet security requirements, like, for instance, maintaining our data only in Australia, only in secure data centers, and only with all the correct security functionality as to how these systems are deployed on the internet. So anytime you need assistance with anything in Lodgit, this is how our support works. Reach through to support. Tell support what your pain point is. They will get back to you either with a solution. Typically, they should get back to you within 30 minutes. They'll reach out to you with a solution, or they'll let you know they're going to escalate the issue to the technical team or to a team which can help with any tax queries. So that's typically the way you'll get your support resolved. If necessary, the support team will set up a go-to meeting with you so they can have a look at what your pain point is and help you resolve and work through your pain point.